Let us start the session now. So as we discussed earlier that there is a contract between the buyer and seller. So here we are having a buyer person B, and here we are having a seller, that is the exporter of the goods in country USA. So A is in USA and buyer over here is in India, and they are having a main contract in between them. So there is a contract in between them, and further these both parties do not trust each other. That is why bank B person B over here visited the bank XYZ, that is an Indian bank over here, domestic bank over here. So person B visited the domestic bank in India and further requested for opening the letter of credit, and XYZ over the appraisal of the candidate, appraisal of the applicant, issued the letter of credit. So person B over here is said to be the applicant in whose favor the letter of credit, and further the person who would be ultimately getting the benefit of the letter of credit, that is called the beneficiary. So person A over here is the beneficiary and person B is the applicant over here, and the bank that opens the letter of credit is said to be the opening bank. So bank XYZ over here is the opening bank and also is known as the issuing bank. So whatever name, it is the same bank, that is the opening bank or the issuing bank. Now XYZ bank, once the letter of credit has been opened based upon the main contract over here, this letter of credit would be sent as a swift message to the counterpart in the country of the seller, that is in USA. There will be the bank name. Let us suppose the bank name is PQR over here, which is correspondent bank of XYZ, and XYZ bank a financial message to this particular bank that is related to the letter of credit. Now PQR is there, and the main purpose of PQR is to advise the letter of credit to the seller over here. So PQR first of all will be checking the genuineness of the letter of credit, and after the genuineness of the going through the authority or the genuineness of the letter of credit, that the message which was sent by the XYZ bank is genuine or not, all the terms and conditions are mentioned well or not. Only after that PQR bank will be advising this letter of credit to seller. Now so now PQR bank is here, the advising bank. So we will be naming this bank as the advising bank over here, and the letter of credit will be advised by the PQR bank to the seller over here. Now person A is having the letter of credit with him. So person A, that is a seller, will be going through all the terms and conditions of the letter of credit, that those are in line with the main contract, and after going through and after checking the validity and the authenticity of the letter of credit and all the terms and conditions of the letter of credit, person A over here will be shipping the goods. So here the shipment of the goods is made now, and the person A will be having the negotiable documents of the goods over here. Let us take the case of the bill of lading. So bill of lading is basically type of negotiable instrument you are having when you have shipped the goods by the way of seaway. Okay, now person A is having the letter of credit and also having the negotiable bill of lading with him. Now person A will be negotiating these documents with some bank, and that bank will be named as the negotiating bank. That bank could be the same as the advising bank, or it could be a different bank also, depending upon the different scenarios and the type of the letter of credit. Let us suppose the case of some different bank. Let us suppose the bank is ABC bank over here, which will be negotiating the documents. I have told you a very simple concept related to the bill of exchange, where there the seller of the goods will be drawing the bill of exchange, and it would be drawn on some person. Let us suppose the case that here it will be the negotiating bank on whom the bills will be drawn. Negotiating bank will be accepting the bill, and further on the acceptance of the bills over here, the documents would be provided to the negotiating bank. Negotiating bank, before accepting the bill, will be investigating the documents thoroughly, that each and every content over here mentioned is appropriate and as in terms of the letter of credit. So whatever the shipment has been made by the seller over here must be aligning with the main contract and must be aligning with the letter of credit appropriately. Is that clear? Once the documents have been drawn by the seller over here and accepted by the bank ABC over here, these documents now will be handed over to These documents now will be handed over to bank ABC over here, that is the negotiating bank over here. Now these documents through the correspondent part will be sent to the bank XYZ, that is the opening bank over here. XYZ bank will also be now inspecting the documents thoroughly, that each and every terms and conditions as per the letter of credit has been fulfilled and there is no changes or alterations related to it. Because once the letter of credit is further accepted by the negotiating bank, and also the XYZ bank does not convey if there is any alteration, XYZ bank would be held liable for the same. Now XYZ bank will be having the 5 banking days, and also the negotiating bank is also having the 5 banking days for the inspection purposes. XYZ bank also will be having 5 banking days for the inspection purposes, and once inspecting the letter of credit, XYZ bank will be presenting this letter of credit to the applicant, and further XYZ bank would be crediting the Nostro bank account of the negotiating bank so as to reimburse the negotiating bank over here. And upon the presentation of the bill of exchange or the usance bill of exchange, the amount will be paid by the negotiating bank to the beneficiary over here. So that is the all process related to the letter of credit. So that is a simple concept. So if we talk about the parties related to it, the first party it is the applicant, and second it is a beneficiary. The other one we learned about the issuing bank or opening bank, then it is the advising bank, and further it is the negotiating bank that will be negotiating the documents. There are some other banks also which are over here. Let us suppose that there is a confirming bank. So if person A over here, that is a beneficiary, is not basically having any information related to the reputation of the opening bank or having any trust issues related to the reputation of the opening bank, in that case it can also say it also needs a confirmation from some other separate bank also. So it is basically a kind of adds a separate guarantee, an additional guarantee on the part of the confirming bank over here. So when the letter of credit in the second phase, when the letter of credit is sent by XYZ bank to the PQR bank, before advising the letter of credit to person A over here, this letter of credit by the PQR bank, that is the advising bank, will be forwarded to the correspondent to the confirming bank over here, which will be adding its confirmation to it. Once the confirmation is added to it, the confirming bank over here will be giving this letter of credit confirmed LC to the PQR bank again, which will be now advised to the seller. That is the role of the confirming bank, that is adding an additional guarantee. Okay, and after that there are also reimbursing banks. So rather than reimbursing the amounts by XYZ bank, that is the opening bank, to that of the negotiating bank, there could be some other arrangement also in which XYZ bank will be paying to the reimbursement bank, and reimbursement bank will be crediting the Nostro account of the negotiating bank. In that case, there is a role of the reimbursement bank only. Okay, so these are all the parties related to the letter of credit, and I hope that you must have all understood it very well, because it is a very, very important topic, and we will also be covering the case studies related to it. Okay, so now let us have a look at the other aspects of the letter of credit, that is the types of letter of credit, the important documents over there, and all the other things. So kindly please wait for a minute, and let me change the file over here so that we could go through the contents. Okay, so under the parties to the letter of credit, we have gone through all parties over here. After that, it is related to the operations. We have already covered the operations part too, so I am skipping this part from over here. Now let us go through the types of letter of credit. So types of letter of credit, before going through the types of letter of credit, let us understand what is UCPDC. UCPDC is Uniform Customs and Practices of Documentary Credit. Now see, you are dealing in different countries, you are dealing with the clients in different countries, with the persons in the different countries, and there must be some standards, there must be some regulations which must be common for each and every of the country, because each country is having different laws, they are having different meanings for the different words, so as there is no ambiguity, there is no dilemma related to it, so as there must be some standards, which are provided under the UCPDC. So UCPDC is Uniform Customs and Practices of Documentary Credit. Why the letter of credit is said to be the documentary credit? Because the banks which are dealing with the letter of credit are dealing only with the documents and not with the goods. Banks are not going to deal with the goods. Banks are only dealing with the documents. That is why it is said to be the documentary credit, that is credit based upon the documents only. So these are UCPDC are universally recognized set of rules which are framed by ICC. ICC is International Chamber of Commerce, and the latest version of the UCPDC is UCP 600, that is Uniform Customs and Practices 600. Okay, now let us have a look at the different types of the letter of credits. Okay, so first of all, it is a revocable letter of credit. Revoke means you can cancel it, you can alter it. So a letter of credit which can be amended or cancelled by the issuing bank without prior notice to the beneficiary before the documents are negotiated by the negotiating bank, it is said to be a revocable letter of credit. But now this type of letter of credit is discontinued under the UCP 600. It is dispensed now. Okay, so letter of credit which can be amended, which can be cancelled by the issuing bank or the opening bank without prior notice to that of the beneficiary before the negotiation of the documents with the negotiating bank, it is called the revocable LC. And the opposite of that is the irrevocable letter of credit which cannot be amended, which is absolute and is irrevocable in nature, provided the beneficiary complies with all the terms and conditions of the letter of credit. So if the beneficiary has complied with each and every term and condition of the letter of credit, in that case the letter of credit is irrevocable. So once an irrevocable letter of credit is issued, it cannot be revoked, it could not be cancelled, it cannot be amended without the consent of the beneficiary. So this type of letter of credit is said to be safe, on the safer side for the beneficiary, as it cannot be amended or cancelled without a prior notice or without the prior consent from the beneficiary over here. After that, it is a irrevocable confirmed letter of credit. Now we know what is the major task related to the confirming bank. So if the confirming bank adds its additional guarantee to the letter of credit and it is irrevocable, that is said to be irrevocable confirmed LC, or simply we can say it is confirmed LC over here. The other type of the letter of credit, it is a transferable letter of credit. Now in the most of the cases, what happens, let us suppose a case over here that A is the buyer, A is the buyer, that is the importer, and B is the seller over here. B is the seller over here or the exporter over here. Now in some cases, or in many of the cases, the B is not indulged in manufacturing of goods. It may also be the case that B needs raw material for the manufacturing of the goods, in both the cases, whether it is indulged in trading or whether it is manufactured and requires raw material, B also needs to import the raw material or the finished goods. It is also necessary that B needs to import the raw materials and further the finished goods, and only after that, once it has procured the raw material or the finished goods, it would be possible at the end of the seller so as to export those goods. Okay, in that particular case, a letter of credit is requested to be opened by the applicant, that is transferable letter of credit, a part of which an amount part of which in full or in partial amount can be transferred to the parties, one or more other beneficiaries. That is basically what? That is the transferable letter of credit. So this gives the beneficiary to request the bank to make a credit available. So based upon this transferable letter of credit, the beneficiary bank can request the banks or to its own bank so as to issue credit to it, so that the amount can be transferred to the different beneficiaries. That is from one from which it wants to procure the raw material. It may be the case that it has basically taken the services from the other vendor over there, so it needs to get credit on for those particular terms, and that is basically possible under the transferable letter of credit, when the letter of credit is issued by the request of the applicant, and further the beneficiary can transfer the amount of the letter of credit. So letter of credit is received over here by person B over here, and person B will be taking this letter of credit to its own bank, let us suppose XYZ bank in the foreign country itself, and further requesting the bank so as to advance the credit, so as to extend the credit to person B on the different beneficiaries. Okay, so amount which can be extended can be the full amount of the letter of credit which is received by person B, or it could be the partial amount, or it could be issued in the name of one beneficiary or in the name of the multiple beneficiaries, depending upon the case, but it can be done only once. The transfer of the amount can be done only once. Okay. So that is transferable letter of credit. Next, it is a red clause letter of credit. The red clause is basically, whenever we say red, it is basically a caution. It is basically a caution. Now, red clause letter of credit is also a caution to the advising bank. Why it is a caution to the advising bank? Because in the case of the letter of credit, here we are taking the case of the opening bank. So opening bank over here is further forwarding a letter of credit. Opening bank over here is forwarding a letter of credit to the advising bank over here. So advising bank is it is requesting advising bank. It is basically requesting advising bank so as to issue a credit to the so as to extend a credit to the beneficiary. So as to extend a credit to the beneficiary. It is not obligatory for the advising bank, but it is requesting. Opening bank under the letter of credit is requesting the advising bank so as to extend the credit to the beneficiary for the purpose of the pre-shipment. For the purpose of the pre-shipment advances, credit is to be advanced to person B over here, because there is no security in between. Because there is no security in between. In between, person B is having no goods with him. That is why it is a caution that the loan that can be advanced by the advising bank, that would be unsecured loan. That would be unsecured loan. Let us suppose the case that person B is to ship the goods, but person B is not having goods right now. In that case, there will be no security. There will be no security if advising bank is extending a credit to person B over here. So it is a caution for advising bank, and it is also not mandatory for the advising bank so as to extend the credit. But if it extends the credit, it would be unsecured advance. That is why the clause particularly, the request particularly, is mentioned in red ink. That is why it is said to be the red clause letter of credit. Is it clear? So it is the red clause letter of credit. It is a caution to the advising bank related to the pre-shipment advance, and it allows a pre-shipment credit to the beneficiary. Okay. So over here, I am going to explain the transferable letter of credit again. Over here, I'm going to repeat the transferable letter of credit again. So there was a request related to the repetition of the transferable letter of credit. Okay. So what is transferable letter of credit? Let us suppose the simple case that person B is a buyer of the goods, and further he has opened a letter of credit amounting 200 lakhs. A letter of credit amounting rupees 2 crore is opened in the name of person A over here, and person A also needs to procure raw material from vendor C, D and E. Let us suppose from C person he needs to import raw material worth rupees 50 lakh. From person D, raw material worth rupees 10 lakh, and also from person E, raw material rupees 10 lakh. Okay. Now in that particular case, if the transferable letter of credit is open, person A will be visiting its bank. Let us suppose the XYZ bank is A bank over here, that is the beneficiary's bank, and requesting its bank so as to basically extending a credit to person A over here. So as to extend a credit to person A over here, a new letter of credit will not be open. It will be just a general credit. Which will be extended by the bank XYZ to person A over here based upon this letter of credit of 200 lakhs. Okay, so person A is having the letter of credit which was further given by A to bank XYZ, and based upon this letter of credit, an advance was given to person A over here in the names of different beneficiaries C, D and E. Now this amount can be the full amount of letter of credit, that is up to the extent of 200 lakhs, or it could be a partial amount, It could be in the name of the single beneficiary, or it could be in the name of the multiple beneficiaries over here, and further it is a transferable only and only once. Okay, so that such type of LC is called to be the transferable letter of credit. It is said to be the transferable letter of credit. Now there is another type of letter of credit which is back-to-back LC. There is another type of letter of credit that is back-to-back LC. In the case of the back-to-back LC, as the name suggests, A letter of credit is opened on the based upon some other letter of credit. Let us suppose the same case that A wants to open letter of credit, but over here A does not only requires a loan, it wants to open a letter of credit. In that particular case, A person over here will be requesting the bank XYZ so as to open the letter of credit based upon the letter of credit it has received. So a letter of credit will be opened based upon this. So that would be what? That would be the back-to-back letter of credit. Okay, so letter of credit will be issued rather than extending just a general loan. A particular letter of credit will be opened based upon the security of this letter of credit of rupees 200 lakhs. So that would be related to back-to-back letter of credit. Okay, so that is the difference between the back-to-back letter of credit and transferable letter of credit. Now we were covering the red close letter of credit, which you have already covered that. Further after that, it is the green close letter of credit. Now green close letter of credit is basically apart from provision of allowing pre-shipment credit. It is also there will be a provision. It will be requesting, the opening bank will be requesting the advising bank so as to allow pre-shipment advance to the beneficiary, and further issuing bank also has to arrange for storage and warehouse facility. Now why this is green close and why the above one was in red close? Now green close means it would be a secured loan. It would be a secured loan. In case of red close letter of credit, it was unsecured loan. It was related to unsecured loan, but in case of green close letter of credit, it is related to the secured advances over here. It is related with the secured advances. Now in case of green close letter of credit, a pre-shipment advance would be allowed. A pre-shipment advance can be allowed. It is not mandatory for the advising bank. It is just a provision that advising bank can extend the credit to the beneficiary. Okay, so advising bank over here, let us suppose the case advising bank over here extended a loan to the beneficiary. Now the advising bank also will be arranging for the warehouse facility, where all the finished goods or raw material would be kept. And in case it is warehoused, a warehouse receipt would be there. And further that makes the loan secured because a charge of pledge can be created on this warehouse receipt. A charge can be created. That is why it will be a secured loan in the case of green close letter of credit, where there was unsecured loan in the case of the red close letter of credit. That is why such provision is basically written with green ink, where that is why it is said to be the green close letter of credit. That is why it is said to be the green close letter of credit. Okay, after that it is a back-to-back letter of credit. We have already covered back-to-back letter of credit. Let us go through the content of the same. Okay, so firstly the invert letter of credit, and second called as the outward credit, that is a back-to-back which is opened on the basis and the security of the original letter of credit. So beneficiary over here received the letter of credit and went to the bank, and based upon the security of this letter of credit, a new letter of credit. So this was invert letter of credit. That was received by the beneficiary, and further new letter of credit which would be outward letter of credit would be opened based upon this letter of credit, invert letter of credit. That is basically what? That is a back-to-back letter of credit. Okay, further after that it is related to the standby letter of credit. Now standby means it will be of no use. It will not be triggered until or unless there is some event. So in some countries like USA, the banks cannot indulge themselves in the bank guarantee. Bank cannot give bank guarantee. So that is why standby letter of credit over there, the standby letter of credit over there is used as a substitute for the bank guarantee. So in this case also, a letter of credit is very similar to that of the bank guarantee, by the issuing bank guaranteeing the payment, or it may be the case that it is guaranteeing the performance, and there is no movement of goods. It is just like an accommodation, and further to a substitute to the that of the bank guarantee. It is a standby letter of credit, or SLOC, standby letter of credit. So standby letter of credit, you just need to basically You just need to memorize one thing, that it is a substitute for the bank guarantee, and further it is a guarantee that is given by the issuing bank for the guaranteeing the payment, or it may be related to guaranteeing the performance. Okay, and there is no movement of goods in this particular case. Yes, in the case of the back-to-back LC, the LC will be opened two times, one by the issuing bank and the other by the beneficiaries bank. Okay. After that, it is related to the revolving letter of credit. So sometimes what happened, that you are procuring the goods from some same vendors. Let us suppose XYZ corporation is there, XYZ company is there, and you are basically importing the goods again and again from the same vendors. Let us suppose V1, V2, V3, and if you are going to open the same type of letter of credit for these vendors, ultimately that would be so harassing for you, because you have to deal in lot ton of the papers over there, a lot ton of documents over there. So what happens in this particular case, under this letter of credit, the part amount which has been utilized is automatically restored. Likewise, if we go through the CC limit, if we take the example of CC limit, in CC limit, what is there? Actually, you are provided with some sanction limit. Let us suppose the sanction limit is 10 lakh rupees. So you can now use the credit of 10 lakh rupees. Now let us suppose you have paid 9 lakh rupees, and further you will be repaying it, and the limit will be restored, and again you can make a payment out of these funds. In the same manner, a revolving letter of credit is open. The revolving letter of credit is open where there a limit is sanctioned to you, and you can use these limits for more than one dealing. That is called what? That is called the revolving letter of credit. So under the revolving letter of credit, the part amounts which have been utilized, so whatever the amount of money that you have utilized from this particular limit, that will be automatically restored and is available for further use. These meant for more than one dealing. Okay, such type of letter of credit is called to be the revolving letter of credit. Then it is a restricted letter of credit. In case of restricted letter of credit, the negotiation is restricted to a particular bank. So it is basically a request or an advice from the beneficiary over here, because he wants to negotiate the document with some particular bank only. In that particular case, restricted letter of credit is open. Then it is the acceptance letter of credit or usance letter of credit. So I have already explained to you the two different type of bills. One, it is a demand bill of exchange, and the other one, it is a usance bill of exchange. So based upon this letter of credit works. So simple example that we took in the very beginning of this video, that was related to the acceptance letter of credit. How it was? Because in that particular case, the bills were, if you remember, the bills were drawn by the beneficiary. So in that particular case, now person B, being the beneficiary over here, is having the bill of lading, that is the negotiable documents, and further a bill over here will be drawn by the beneficiary on the negotiating bank, and negotiating bank will now be going through the contents of the letter of credit and further the contents of the negotiating documents, and after that, only after that, all the documents are aligned to the main contract and aligned to the letter of credit, negotiating bank will be negotiating these documents, and this bill will be accepted by the negotiating bank. And once the acceptance is there and further the bills are given back to the person B over here, person B will be now handing over these documents, that is the negotiable documents, to negotiating bank over here, Now it is basically on just the event of the acceptance of the bills, now the negotiating documents were handed over to the negotiating bank. The negotiating documents were handed over to the negotiating bank. That is why this type of letter of credit is said to be the acceptance letter of credit or usance letter of credit. Now, why usance letter of credit? Because there will be a particular time period that would be given. So there will be a future date that would be given. Let us suppose the case that a period of 3 months is given, that after the 3 months, negotiating bank will be paying to the beneficiary. Okay, so that would be usance because the date is postponed and it is in future. Okay, so that is the acceptance letter of credit or usance letter of credit. And when we say cite letter of credit, what do you mean by cite letter of credit? In that particular case, on just citing the documents, the amount is to be paid by the negotiating bank. that in the one hand negotiating bank will be making the payment, on the other hand the beneficiary will be handing over the documents to the negotiating bank. That is a site LC. That is the case of the site LC. So that is the difference between the acceptance letter of credit and the site LC. Is it clear? Then it is a deferred payment credit. Now what is deferred payment? In the case where there you are to import the capital goods, where there you are to import the capital goods which are huge in amount, in that particular case you need a lot amount of credit, you need a lot ton amount of credit, and the amount by you will not be paid in just one go, you will be paying it in installments, you will be paying it in installment. In that case we use the term deferred payment, that you are not going to pay it in single shot, you will be paying it in different terms. Let us suppose we are paying it in 3 years, we are going to pay it in 3 years. In that particular case we will be saying it is a deferred payment credit. In the same case, we were also using this particular term in the usance bill of, you were basically using the same concept in the usance letter of credit too, where you were not paying it in one go and you were paying it at some future date, and you were paying it at some future date. In the same way, in the case of the deferred payment credit, the payment will be made by the applicant in some fixed future dates, on some fixed future dates. Okay, so that is the difference. Other than that, the difference is in the case of the usance letter of credit, you need to draw the bill of exchange, and that is to be stamped, and the stamping on the bill of exchange is to be done as per the laws applicable. So there will be an additional expense. But in case of deferred payment credit, you need not to stamp it, okay. So there is a absence of bill of exchange that saves the beneficiary from cost of the stamp duty and other levies. Okay. Then it is a negotiation credit. In a negotiation credit, the issuing bank undertakes to make payment to the bank which has negotiated the documents. Okay, so if we take the case of the negotiation credit, in that particular case, issuing bank is undertaking that if each and every terms and conditions of the letter of credit are fulfilled and the negotiating documents are in line with those particular letter of credit, in that case we undertake that we will be paying the amount to the negotiating bank, and further that would be done. In that case it is said to be the negotiating credit. Okay, after that it is related to the appraisal of LC limit. I already told you that in most of the cases that letter of credit is opened in the form of the LC limit. So LC limit is formed, so because when you're dealing in international market, you are basically trading again and again with the vendors, and in that case it would be very much difficult so as to open letter of credit each and every time. So limit would be sanctioned for some particular vendor, let us say, and that there we deal with the appraisal of letter of credit. So there are different terms which are going to learn. First of all, it is related to the economic order quantity. So you are basically importing. Now you are importing not from a distance of 100 kilometers or 100 miles, you are basically importing at a distance of thousands of miles and thousands of kilometers, and definitely you cannot import like you are importing for rupees 1 lakh or you are importing for rupees 2 lakh, because it would not be economic. As per the, there would be different cost would be there, additional cost would be there, like carriage cost would be there, insurance cost would be there, other than translation cost, foreign currency translation cost would be there, and so it would not be economic. So you need to find the financials that what amount you must be importing or what volume you must be importing, that it must be economical for you, So this is dependent on the monthly consumption of the goods and the EOQ, that what will be the average amount of each LC. So as to define that what would be the average amount of LC, you go for two particular parameters. First of all, it is related to the monthly consumption of the goods, monthly or annual consumption of the goods, and second, it is related to the EOQ, that is the economic order quantity. So EOQ is estimated by examining the source of supply, meant of transport, discount we are getting. So in case of imports, EOQ is often larger in comparison to that of the domestic purchases. Okay, so if you go for domestic purchases, EOQ is lesser, but if you go for the imports, EOQ is much higher due to the different additional cost involved in it. Okay, so that is basically related to the first term. After that is the frequency of letter of credit. It is related to the frequency of letter of credit. So once you have estimated the EOQ, that is economic order quantity, the number of LC of letter of credit can be calculated. It can be easily calculated. How it can be done, we'll be basically discussing it in an example. So let us take the case of example straight away so that you could understand it very well. Then we'll be coming back to the theory part again. Okay, so let us take the case that there is a lead time of 10 days and there is a transit period of 20 days and usance period of 6 months. So lead time is basically the time that you are dealing with the bank and it goes to the beneficiary accepts it. So that is basically related to the lead time, and the transit time is given to be NTP is given to be 20 days over here. Now what is NTP? So NTP is basically not that the person B, that is a beneficiary over here, has shipped the goods and it will reach you. That is not the transit period. The transit period is related to when the beneficiary has negotiated the documents with the negotiating bank. When the beneficiary has negotiated the documents with the negotiating bank, and till the date the nostro account of the negotiating bank is credited, the time period in between is said to be the transit period, or it is said to be the normal transit period, We have already covered it under the FEDI rules, FEDI guidelines. Okay, so that is basically the normal transit period. So the lead time is given to be 10 days and the transit period is given to be 20 days, and further the usance period, that the future date, the amount is to be paid. So the usance period over here is mentioned to be 6 months. So the total time period for which the one letter of credit, if one letter of credit will be opened, it will be outstanding for a period of 10 days plus 20 days plus 6 months, that becomes 7 months. So if one letter of credit is opened, it will remain outstanding for a period of 7 months. And further, if consumption of goods is rupees 6 crore per year, so the consumption over here is 6 crore per year and the economic order quantity is given to be 1 crore. So LCs to be opened would be equal to what? It would be equal to consumption. So our consumption is 6 crore and 1 crore LC is the EOQ. So EOQ is 1 crore and our annual consumption over here is 6 crores. So total number of LCs which are to be opened, so 6 LCs would be opened annually. And what would be the frequency of opening letter of credit? That we can calculate by dividing 12 divided by 6. So number of months in a year divided by the total number of letter of credits to be opened. So each LC would be opened in a period of 2 months. So in 2 months, one LC will be opened. Now one letter of credit remains outstanding for a period of 7 months. So let us take a timeline over here. So this is 1, 2, 3rd, 4th, 5th and 6th and 7th and 8 months over here. So we have taken the case of 8 months over here. So now suppose in the very first month the letter of credit was opened, so it will remain outstanding for the next 7 months, that is up to the end of the 7th month. It would be outstanding over here, and after the second month the other LC would be opened. In the third month the LC would be opened, and on the 5th month the letter of credit would be opened. Okay, so that would be the scenario. And also in the 7th month another letter of credit would be opened. So how many letter of credit would be outstanding? So how many letter of credit would be outstanding in one particular time? It would be 4 letter of credit would be outstanding in one particular time. So how much term is to be limit to be sanctioned? It would be one LC is amounting rupees 1 crore. So 4 LCs would be outstanding at some particular point. So 4 LC multiplied by 1 crore, that is a EOQ, and that would amount it to 4 crore of the limit is to be sanctioned. 4 crore of the limit is to be sanctioned. Now numerically it can be done very easily. So first of all, we were to ascertain the EOQ. EOQ is already given to you, already provided in the question itself. Now you have to ascertain that how many letter of credit would be opened in an year. How many letter of credit would be opened in an year? So you can find it out by you can find it out by EOQ divided by the by the annual consumption divided by the EOQ. Annual consumption divided by the EOQ, that comes out to be 6 LCs. So in total 6 LCs would be opened in an year. So what would be the frequency of opening the letter of credit? It would be 12, that is the number of months in a year divided by 6, that comes out to be 2 months. And after that you need to know that one letter of credit remains outstanding for a period of 7 months. So the total number of outstanding LCs in the period of 7 months, that would be equal to 7 months divided by 2 months, that is equal to 3.5. That is equal to 3.5. So we will be sanctioning, because we will be rounding it off to the higher digit. We will be rounding it off to the higher digit over here, because one letter of credit would not be opened in the amount of the 50 lakhs now, because our EOQ is 1 crore. So minimally 4 letter of credit would be outstanding. So it would be what? 4 crore of the limit will be sanctioned. 4 crore of the limit would be sanctioned over here. So that is related to the appraisal of the letter of credit. So that is related to the appraisal of the letter of credit here. Is it understood? So we were talking about the average amount of LC, and further it was related to frequency of the letter of credit and how many LCs will be outstanding at some particular period of time. At a particular period of time. So the time taken for one LC to remain in force depends upon the lead time, that is the time taken from the date of opening LC to shipment of goods, and further the transit period and the usance available to the purchaser from the date of receipt of the goods. So, okay, so that is basically the outstanding at particular period of time. Okay. After that, it is related to liabilities and responsibilities and rights of the parties. So first of all, let us have a look at the first party, that is the applicant on whose behalf the letter of credit is opened. So the applicant of the LC must give complete, precise instructions for issuance of letter of credit and any amendment thereof, because these two are the main parties. The beneficiary and the applicant are the main parties, and there is a main contract in between them. So there must be no ambiguity. So there must be no ambiguity related to it. So the applicant must be giving each and every detail very precisely related to the opening of the letter of credit, and letter of credit must not include excessive details. So there must not be excessive details. That pin to point detail must not be given, and further it should not give reference to any of the previously opened letter of credit, because that will create an ambiguity, that will create an confusion. So that must be avoided. The applicant should indemnify bank against obligations imposed by foreign laws. Now what is indemnity? So because banks are dealing on the behalf of the applicant now, bank is dealing on the behalf of the applicant now, we are talking about the opening bank over here. So now if there is any change in the foreign law, and due to which the bank was obligated so as to pay the beneficiary, bank was to pay to the beneficiary, or there was some loss to the bank over here, opening bank over here, in that particular case, the applicant will make good the loss. Okay. So that is related to it. After that, it is the issuing bank. So issuing bank must ensure itself about the credit worthiness of the applicant. So whenever the applicant visits the branch, visits the premises, the opening bank first of all must ensure itself about the credit worthiness of the applicant. Only after that the letter of credit must be optioned, and issuing bank gives a definite undertaking to make payment in case of sight and accept, and further pay on maturity in case of acceptance letter of credit or deferred payment letter of credit, to authorize bank to negotiate and further to reimburse the negotiating bank, provided that the stipulated documents are presented under the letter of credit are correct enough. Now what does it mean? So there is an undertaking on the part, there is a liability on the part of the issuing bank, that if each and every term and condition related to the letter of credit was meant to be correct, and the negotiating bank negotiated the bills with the beneficiary over here, or has made the payment to the beneficiary, if it is a case of the letter of credit, or it is the case that the documents are negotiated and the payment is made by the negotiating bank on the usance date or on the maturity date, in that case the issuing bank is to compensate the negotiating bank, is to reimburse the negotiating bank. That is basically related to it. After that, the letter of credit or amendment issued must be precise. So if there is any amendment, that must be precise enough, and there must be no ambiguity in the instructions and the details mentioned there in the letter of credit. and it is a responsibility of the issuing bank to examine the documents with the reasonable care, and 5 banking days are given for that particular purpose. So it must be determining by, it is as per the international standards and as per the documents which appear on the face, and further it must be complying to the terms and or terms of the letter of credit. And if it wishes to refuse the document, it must also be done within a reasonable time. So if wants to inspect the documents, that can be done within a 5 banking days, that can be done within 5 banking days, and if it wants to refuse it, it can be done within those 5 banking days only. After that, there can be no refusal on the part of the negotiating bank or on the part of the issuing bank. Is it clear? After that, it is related to issuing bank solely on its own judgment can approach the applicant for waiver of discrepancy. So if there is any discrepancy, let us suppose the issuing bank is over here and there is discrepancy on the part of the document so received, and in the 5 banking days it was unable to locate the discrepancy in 5 banking days, and further it approaches the applicant now said that this is the difference between the original letter of credit and so the document so received. If the applicant says it is okay, it can give the waiver to the discrepancy. Otherwise, the issuing bank will make the good loss. Further, it is related to advising bank. So the advising bank has option to choose as to whether it wishes to advise the letter of credit or not. So advising bank is having the option so as to choose if it wants to advise the letter of credit or not. So if it agrees to advise the letter of credit, then it must be done so by taking reasonable care. First of all, it must be going through the contents of the letter of credit and must be checking the genuineness of the letter of credit. And further, if it decides not to advise the letter of credit, that must be informed to the issuing bank immediately. If the advising bank is unable to establish the authenticity of the letter of credit, let us suppose the issuing bank forwarded the swift message to the advising bank over here, and advising bank was unable to authenticate the letter of credit. In that particular case also, it must be notifying the beneficiary and also must be notifying the issuing bank immediately related to it. Okay. And further, it is related to the responsibilities and liabilities on the confirming bank. So confirming bank can give definite undertaking in addition to the issuing bank, that at the request of the issuing bank to make payment on presentation of documents. So whenever the documents would be presented or as per the terms and conditions. So if it is a letter of credit, in that particular case the amount is not to be paid immediately, it will be paid after some future date. Okay, it will be paid on some future date. In that particular case, the confirming bank undertakes that it will pay the amount. So that is the main task of the confirming bank. And further, the confirming bank, advising bank and the nominated bank can be the same. So these bank can be same. The confirming bank, the advising bank can also be the confirming bank. The advising bank can also be the negotiating bank. In case it does not agree to add its confirmation, it must be informed to the issuing bank without any delay. So if a letter of credit was forwarded by the advising bank to the confirming bank and confirming bank refused to add the confirmation, that must be informed to the issuing bank without any delay. And further, it may also choose to advise amendments without adding its confirmation. Without adding its confirmations. However, intimation must be sent to the issuing bank and the beneficiary. So if the letter of credit was received by the confirming bank said that it is not going to adding its confirmation, but it basically pointed out the amendments over there. It advised the amendments over there that can also be done, but in that particular case, it must be advising to the beneficiary as well as to the issuing bank without any delay. Okay. Then it is related to the negotiating bank. So it is a responsibility of the negotiating bank or the nominated bank to examine the letter of credit. For that particular purpose, the negotiating bank gets a time period of the 5 banking days in which it needs to investigate the documents and further so as to take a decision so as to negotiate the documents or not. Okay. And further, protection to banks. It is related to banks do not assume any responsibility for the genuineness of the documents submitted. So if a letter of if the bill of lading is submitted if the bill of lading is submitted by the beneficiary to the bank, banks are not basically concerned related to the genuineness of the bill of lading. It is related to concern with the originality of the bill of lading, and further related to that all the terms and conditions of the letter of credit are fulfilled, and banks are not responsible for any loss arising due to delay in transmission or loss of messages or documents or any kind of telecommunication delay. So if there is any kind of communication delay, any kind of telecommunication delay, there is any kind of loss that is occurred due to these, bank is not going to bear any kind of the loss. Bank is not responsible for these losses at all. Is it clear? And further, no responsibility is taken by the banks for errors in translation or interpretation of the technical term. So if there was any error in the interpretation of the term, if there was any error in the translation of the technical term, bank is not responsible for that particular purpose too. Banks also do not take responsibility for loss arising due to close of their business by act of God, commotion, civil rights, floods, etc. that goes beyond their control or under the superpower. That is also bank will not be responsible. That is related to the force majeure. So if there was some activity related to the terrorism, so if there was any activity related by the act of God or commotion or civil right is there, bank is not going to take a responsibility related to it. So if we take the case, actually what happens, we take the case of the beneficiary over here. The letter of credit was advised by the advising bank to the beneficiary. Go through the content of the letter of credit and found each and everything very correct. So it shipped the goods. Now it is having the bill of lading with it. Now these documents are to be presented by the beneficiary to the negotiating bank. There is a time limit also in between. So let us suppose there is a negotiating bank NB and B is a beneficiary over here, and these negotiable documents along with the other documents are to be presented by the beneficiary to the negotiating bank within a period of 21 days from the date of shipment or before the expiry of the letter of credit, expiry of letter of credit. Okay, so in that meantime, let us suppose 20 days passed and beneficiary has not presented the documents to the negotiating bank, and on the 21st days, let us suppose there was an event of force majeure. There was a flood, there was a civil rights, there were act of terrorism, or there is act of God. Okay, and further the beneficiary was unable to present these documents to the negotiating bank in time. The beneficiary was unable to present these documents to the negotiating bank in a period of 21 days. In that particular case, the letter of credit would be cancelled and the negotiating bank or any other bank cannot be held liable for that particular purpose. Is it clear? So banks do not take any responsibility for that particular purpose, and also banks do not take any responsibility for the acts of a correspondent bank. So if there is some loophole on the part of the correspondent bank, whether the bank was chosen by the applicant or whether it was chosen by the opening bank itself, bank is not going to take its responsibility at all. Bank is not going to take the responsibility at all. Okay, then it is related to the documents under letter of credit. So it is basically only and only the documents which the banks are dealing with and not the goods. Okay, so the documents are basic requirement of any trade and it evidences the carrying and completing of the trade transaction, whether the transaction is local or it is international. The documents are very much required for that particular purpose if we want to know if the transaction is completed or not. Okay, so documents are having even a more important place in the international trade, since interest of buyer, seller, buyer's country requirements as well as the seller's country requirements are to be fulfilled. So we are dealing in different territories. So all the laws are to be basically complied with. Okay, so the documents are very much important in the case of the letter of credit in international trade too. So the scrutiny of the documents presented in the letter of credit is very much important and very much crucial. So the decision of the payment related to the payment or related to the acceptance of the documents are to be taken by the negotiating bank and further by the issuing bank or by the confirming bank. Solely depends upon the documents only. So they are going to deal with the documents only, and based upon these documents only they are going to take the decisions related that they want to set the letter of credit, they want to add the confirmation, they want to make the payment all that will be done based upon the solely based upon the documents only. Okay, so the documents must be scrutinized from the point of articles of the UCPDC. So these are basic rules and regulations. These are the basic rules and regulations which have been mentioned under the UCPDC. UCPDC is Uniform Customs and Practices of the Documentary Credit. So these rules and regulations are there in the form of the different articles, and those must be complied with. Those must be complied with. Okay, so what are the different type of documents over there? First of all, it is a bill of exchange. So bill of exchange is a very important financial document. So there are three parties. One is a drawer, other is a drawee on which the bill of exchange is drawn, and the bill of exchange is to be accepted. Only then it will be valid, and after that it is given back to the beneficiary. So in this case also, in the case of letter of credit also, the bill of exchange will be drawn by the beneficiary, and after that it would be given to the negotiating bank. The negotiating bank would be accepting it after going through the contents of the documents, and further acceptance, after the acceptance, the bill of exchange would be given back to the beneficiary. And on the presentation of the bill of exchange to the beneficiary, to the negotiating bank over here is obliged, having the obligation so as to pay the amount to the beneficiary over here if each and every term and conditions is fulfilled. Is it clear? So it should be in normal due course satisfy the following requirements. So what requirements are to be fulfilled? First of all, it is related to it should be drawn by the beneficiary on the issuing bank and payable at tenor mentioned in the letter of credit. So it should be drawn by the beneficiary on the issuing bank, and it can be accepted by the negotiating bank over here. It should indicate the number of letter of credit. So the number of letter of credit along with the issuing bank name under which it is drawn must be mentioned on the letter, must be mentioned on the bill of exchange. It should, unless or otherwise specified, be drawn in the currency of the letter of credit. If the letter of credit is opened in USD, the bill of exchange must be in USD, and further if it is in euro, it must be in euro. Until or unless specifically mentioned on the letter of credit, it cannot be in some other currency. It must be in the currency of the letter of credit. Okay, and further it should not be exceeding the amount of the letter of credit. If the letter of credit is amounting rupees 2 crore, bill of exchange amounting rupees 2 crore only, maximum of rupees 2 crore can be allowed. It cannot go beyond that particular amount. And further it is related to any corrections that should be duly authenticated. So if there is any correction, that must be duly authenticated. Okay, so that is related to the bill of exchange, and in the next video we'll be covering other important documents too. So kindly please do like the video and do share the video right now